Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at the coal stocks and whether there is an opportunity to profit from this area. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. I'm Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now before we move on, thank you for showing your support for our channel and hitting that subscribe button. And remember, as you subscribe, click that bell on the right of it so you keep up to date with our latest videos. Also remember to tune into our live Australian stock market show, which is on every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your questions. Now last week a lot was said about Australia adopting a target of net zero emissions by 2050, with part of the discussion centred around coal-fired power stations. Now the challenge Australia and the world has is whether renewable energy sources can meet the full requirement to achieve net zero emissions. Now regardless of what you think about coal as a resource, it has certainly performed very well in the last year, with price rising from around $60 a tonne to over $200 a tonne, although it has eased off slightly in the last month. That said, I believe this pullback is only temporary, as stockpiles around the world are low, and given that winter is not too far away for Europe, the US and China, demand will increase. Now it may surprise some that Japan is our largest customer of coal, while China comes in second, although China is now getting its coal from Russia rather than Australia, which is likely to continue. Other Asian countries like India, Korea and Taiwan, amongst others, buy coal from Australia, so any decrease in exports to China may be offset. Australian companies are well placed to benefit from the increased demand for coal, with Whitehaven Coal up earlier this month almost 300% since September 2020. New Hope Coal and Yancoal Australia have also benefited, as both were up over 100% since September 2020 prior to the recent dip in price. That said, all three stocks have pulled back at present, which is exciting news for investors, as I believe they will all do well into the first half of 2022. Given this, I recommend investors sit back and wait for a month or so and then look at these stocks with a view to entering once price stops falling. Now it's time to take a look at the market, so let's start with what were the best and worst performing sectors last week. Well, the best performing sectors included healthcare, and that was up 1.32%, followed by communication services up 0.48%, and consumer discretionary, and that was down 0.35%. The worst performing sectors included consumer staples, and that was down 4.06%, followed by utilities, and that was down 2.98%, and materials, that was down 2.16%. Now the best performers in the S&P ASX top 100 stocks included Reliance Worldwide, and that was up 11.18%, followed by Reece, and that was up 9.95%, and Lynas Rare Earths, that was up 7.16%. The worst performing stocks, they included the A2 Milk Company, which had a bad week, and that was down 9.29%, followed by Horizon down 6.67%, and AMP down 7.30%. Now before we get into taking a look at the charts, remember, if you want to understand the stock market and have more control over your trading and investing, then you can get a copy of my first book, How to Beat the Managed Funds by 20%, for free. All you have to do is pay the shipping. Now to get your copy, just visit our website, wealthwithin.com.au, or give us a call on 1300 858 272. Moving on, what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. Well, early last week, I'm sure many people were excited as the market started trading up, but I think by Friday, the smiles would have turned into frowns with a large move on Friday. I think the market was down about 1.3% on the Friday, and it really showed that the indecision in our market is still very, very, very much there. But let's go and have a look at the charts and actually see what happened. Now, on your screen, as normal, is a monthly chart on the left and a weekly chart on the right. I'm still not using my normal normal laptop, so some of the charts aren't exactly the same as I normally would show you, but you can see here, if we're looking at this monthly chart, you can see the break above that long term. I'll go right back and show you. This green line goes all the way back to the data that I've got right back at the start of 1982, and you can see how the market just moves up and around this line. It does break through it for periods of time, like that was before the GFC high, came back and then it hit its head on it, and it's just travelling around it. Now when it gets above this, that's when we start saying that the market is starting to become overheated and needs to come back. And it's not necessarily that it will do straight away, because you can see here way back before the GFC high, it broke through there in July 2005, and you're talking about the high was November 2007. So over about not quite 2.5 years later. So it can stay above that line for a period of time, but eventually it will come back to roughly that angle of that blue line. So I'm not suggesting it's going to do that now. I'm just suggesting the more it goes up, more vertical. And you can see the angle of this, and I know I've showed you this before, where the angle of this is quite fast, a lot faster than what we've through here, and really a lot faster than what we saw through this move from the 2003 low right up to the GFC high. So we do need to be careful. That's really why I was saying the last few months I'd really like the market to come back and ease off, coming back down to around 7,200 points, maybe 7,000 points, and then move up again to really keep along this sort of green line, because then it's a long-term, it's a lot more sustainable. And that's really what we're seeing here. And currently we saw here's October's bar, and you can see October, basically, if I'm looking at the whole bar, it opened at 7,629 points. It closed at 7,639 points. So the whole month we went up and down in a range of 328.5 points for the whole month, between when it opened, it made its high, made its low, and it came back and it closed just 10 points higher than where it opened. That's a very, very indecisive bar, and you can see here that the market really is around the same levels as what it was back there in June, July area, as far as the market closing where it is right now. And with one bar down, so that's a down bar. This bar here, October, didn't go below the September bar. You can see the low there at 7,446, whereas this bar here in October 7,457, so it's slightly higher. So it will be interesting to see whether the market goes down, has another down month, or has a down month through here, or whether we start to move up now and break that previous all-time high set in August at 7,902. But let's go and have a quick look at the weekly chart, and I'll show you what actually happened. So here's your weekly chart. Now, I know I've said before, the markets don't go straight up and they don't go straight down. They do have these moves that go the opposite direction of the trend, and I was thinking that this bar, the market should have gone below that low in October of that week, and we should have gone down a little bit lower than that. But the last 1, 2, 3 weeks prior to last week, we're all bullish. It closed up, closed up, closed up, and then last week we were doing really, really well, and we pushed back up to about 3/4 of the distance. You can see 75% of the distance between that high, the all-time high, and that low. So it pushed up about 3/4 of the way before reversing and coming down and closing right down the low of its bar. Its low was 7,634 and it closed at 7,639, only 5 points off its low. So here's the trick. So right now we're on a weekly chart, and if we do get one more bar down here, then it's not going to worry me too much, because it's still then possible for us to get through that previous all-time high over there of 7,902. So it still is possible to do that. Now you notice on the chart that I've got some numbers here, and you can see here last week the market opened through here and it hit right up at this point there at high of 7,786, and it was very close to that 75% level there that I've got. Now that level is calculated by using that high there of 7,902 and that low there of 7,446, and just saying, well, what's 3/4 of that distance back up again? And that's what we see, 7,788. So it hit that point and immediately reversed and came down. Now that's not a big worry for me at the moment, because we've had 1, 2, 3 bars up through here, 3 and a bit bars through here. So next week, or this week coming that we're talking about here, if we get another down bar here that goes below that low there of 7,634, I'm not too stressed about it, but I wouldn't want more than one. I would want next week for the market to start moving up again, and then if it did that, then I'm pretty confident it would break through that high, and then it would be really strongly I would probably put the strong waiting for it to go through that high. If we get 2 or more weeks down through here, then the danger is that we will go through that low there of that 7446.5 points. So right now, it's not the time to be buying lots of stocks. The time right now at the moment is just sitting on your hands and just taking it a little bit easy, because you could be getting in a little bit too early. Now, I know I've said it a few times, we need to wait for direction to happen, and sometimes when you see a market move up for a few days or a few weeks, some of the traders jump in because they think the market has turned and it's going up, and they don't want to miss out, they don't want to pay a higher price. So for example, if a stock falls to $1 and it starts to move up for a few days or even a couple of weeks, a lot of traders will start jumping in. But all that's happening is it's having a move that's counter to the longer term move. So it moves back up like I've talked about before falling away again. That's what we've got to look at the moment. We've had a few weeks up, as I showed you there, and that could just be a move counter to the longer term direction. So I'm not discounting our market can't go lower through into November and have a major low in November below where that bar was a few weeks ago, that big blue outside bar that I showed you there. So that's what I need to be really careful of. So as I said, if we only get one down week, if this week is an up week, that's great. That's even better. If this week is a down week, that's still okay. But then from next week on, I would expect it, if its market is bullish, for it to start rising and moving through that previous high, and then obviously the previous all-time high. So we'll see. We'll know a hell of a lot more next Monday. So watch next Monday's report. Now's the time is to get into your questions for me. Now, the first question we've got today is from Nicole, and Nicole says, hello and thank you for your wealth of information. I really enjoy listening to you guys. Can I put forward a stock for your next analysis, please? Absolutely, Nicole. She's got Neo Metals, or NMT. She doesn't say whether she owns it or she doesn't own it or anything about it, but that's okay. Let's go and have a look at Neo Metals. I'll just put my glasses on, and you can see Neo Metals has been moving up super strongly all the way since July 2020. A massive move up there. Now I'll go and look at the whole chart, and you can see here, this is very much a trading sort of stock, and you can see this big moves that it does here. And Janine and I often talk about these sorts of stocks. They're not necessarily stocks for investors. They are not a buy and hold stock, because you could have bought Neo Metals way back here in April 2006 for the same price. You could have bought it into 2021. So it is a trading stock. As you can see there, it really hasn't had any downward moves. There's a little bit one there. It's an inside bar that closed lower, but it's 43 cents, but it didn't go below that one. You can see 43 cents, so they had equal lows here. So it hasn't had a down movement since that bar there in August 2020, so it wouldn't surprise me if it doesn't have one too soon. But it's getting really close to that all-time high there of $1.07. So here, if we looked at the last month, at the end of October, it hit $1.04. And a lot of volume going in for a dollar stock. So there's a lot. What's happening is, and I'd say what's been happening here, and I'm going to put some volume onto this. I'm just trying to find where's volume. There it is, volume. And I'll just put that onto the chart. Now you can see here, if we look at the whole history, there's a lot more volume coming through in here. And what's happening there is the people that didn't get in earlier are starting to really get in here. And this is what stops stock starting to rise. When everybody wants to get into the stock, that's when the end is near, and it'll come pretty soon for this stock, I think. If you do own this stock, I'd just be really careful at the moment. I wouldn't be exiting. I'd still be hanging on, but I wouldn't be jumping into this stock right now, because it could stall at that previous all-time high. Now, if you look at here, it's had a nice run, but it keeps getting steeper and steeper and steeper. And this is all the people that had all the fear through here not wanting to get into the stock, and now that's all the FOMO people trying to get into it because they fear missing out on this big price rise, and they've seen how much the stock has moved over the last few months. So if we go to that low there in July 2021, which is only a few months ago, it's risen for 140%. So people are talking about this probably in chat forums and other things, and then people are jumping into it. So I'd be really careful. If I were you, Nicole, I would just be putting on a stop loss on myself on this stock, and I would suggest if it starts to break through this sort of line through it's a rough trend line I've got. My students will probably shoot me for this, but a rough trend line, I'd have an exit strategy on it. But right now, I'd be staying with the stock while it's going up and make sure I've got an exit strategy on it. But it's not a stock that I would be jumping in right now, because given it's so close to that previous all-time high, I'm not saying it won't go through that, and I'm not saying it's won't go a lot higher, but eventually those people that didn't get in early in the run, they will run out of money. And when they run out of money, the market stops rising, or the stock will stop falling, because a lot of people don't understand what makes the stock stock stops rising and starts to fall. And at the end of the day, it's just the money that stops going into it. That's all it is. It's not more sellers come into it. It's that the buyers run out. They put all the money that they're ever going to put into it, and therefore there's always sellers or people taking profit. So then it starts to tip over and go the other way. What stocks are stopped from falling is you just run out of sellers. Everybody that was ever going to sell has sold, and the buyers will just come in because you'll always get buyers trying to buy cheap. You'll always get buyers trying to be early, and obviously you also get institutions and people looking at 5 and 10 years out, so they'll start buying. But that's really what happens, is you run out of buyers at the top and you run out of sellers at the bottom, and I think this stock will run out of buyers in the not too distant future. But thanks for asking the question. Now we have a question from Adrian, who says, "Hi Dale, you mentioned cannabis stocks and alternative energy at the top." Now that was in my last report, but didn't look at any alternative energy stocks. No, I didn't. I did that on purpose simply because I'd done energy stocks, alternative energy stocks, only a few weeks earlier with Janine, so it wasn't worth me doing that. If you want to go through that video, please go back and have a look at it. We did talk about alternative energy stocks there, but we hadn't looked at cannabis stocks for a long time. That's why I only did that. And also these market reports are only a short thing, like half an hour. I didn't have time to go through lots of stocks either. He goes on to say, "Have some of your views changed since your last featured this sector?" Absolutely not, it hasn't changed. I'm inclined to pick an ETF here as I'm very keen for some exposure. This is, again, he's talking about alternative energy stocks. I'm wanting to invest longer term on this, but can't find a company in the ASX top 20. No, there's not one in the top 20, and he's not confident enough to trade lower liquidity stocks, as I've had mixed results previously. Really smart move. He says, "Thanks, Adrian." Smart move, Adrian. If you're looking at lower liquidity stocks, yeah, you're going to be, it's really hit and miss, and alternative energy stocks are in that basket. And whilst I don't promote a lot of ETFs, I'm also pretty much actively against a lot of ETFs. But if you hear my voice, it's always about index tracking ETFs. I don't like them at all. I just think they're a waste of time and money, and you'll make better returns investing directly. But when it's looking at specific areas like alternative energy stocks, which can be a little bit more hit and miss, and they're a little bit more liquid because they're growing, like things like artificial intelligence, and it could be cannabis stocks as well, because they're specialist areas, and a lot of the companies are, they're breaking new ground, and it's hard to get all the, if you're looking at all the stocks, which one do you pick, and how do you do that? And because they're not high liquidity and they're not highly backed by the big end of town, what do you do? So I have no issues with you buying an ETF if you check out alternative energy ETFs. I have no issue for you buying one of those rather than a specific company. But then all I would be doing, if you want exposure to that area and you're doing okay on an ETF, is just keep researching the area, because eventually you'll get into some of the companies and they'll get bigger, they'll start making money, and you'll go, yeah, I might get into that area and I might buy the company or specific companies myself. But you still need to be in the top 20 stocks as well. But thank you, Adrian, for asking that question. It's really good of you to do that. Next one we have is from, I can't even say the name, Two Lives or something. It says, I can't exactly say what the name of the person is who's asking me the question, but they said, Dale, with coal prices skyrocketing in the last year, Whitehaven Coal seems like a good stock to hold for the short to medium term, but lately it's crashed 24% or so. Do you think it's a good opportunity to buy now, or should we wait until the uptrend on the weekly kicks in to confirm, as it might be a falling knife? Would love to hear your thoughts, John. Okay, John, good question, and perfect for my topic today, because obviously coal stocks was the topic of the top part of my report. So let's go and have a look at Whitehaven Coal. I'll put my glasses on. Now, you are right. Basically, time is to wait right now before we need to jump in. But as I said in my report, I still think there's a lot more in this area, and you can see here Whitehaven Coal, great stock here. And if we look at it again, it looks very similar to NMT, remember, Neotech, because it's much a trading stock. It moves up and down in these big moves. We're only part of the way through a move. If I go and type in, see if I can get the tool that I want. If I click on this, if I look at that point there back in December 2008 to that high, we can see there that there is 25 months that took to get to that high. If I do from that low to here, I can see there it's 29 months to get to that high, from that low to there. Now if I go and do the current move, and this is, I'm trying to be really basic here, guys, it's only 13 months. we're not even, we're halfway to this one, or less than half of the way to that one. So my thinking is we're only part of the way through this uptrend at the moment on Whitehaven Coal. Now, I'm not saying that it's going to do that straight away, because it has had a pause through here. It had a pause through there on this whole bull run. Little bit of a pause through there, and this one had another pause through there. So all this is, there's a pause, moved up nice and strongly. It's just trying to, the momentum has just come off a little bit, which is not something to be too worried about. So I'm not saying, if you're looking for short to medium term, I'm okay with that. I still think it's got more moves in it. But if we look at this stock, and I'll put my trend line on here, and we put it down there, you can see here, that's roughly its momentum around that line. And it's not a trend line, I'm just using it as a momentum. And it's just coming out, it's just come below it. So I'm expecting it would go back above it and trundle along this line of just above and just below it over the next sort of 12 months-ish. So I do like this stock at the moment, just too early. You can see here the last couple of weeks, if I expand that up, see, traded up, closed lower, traded up, closed lower, traded up, closed lower, traded right down, closed a little bit higher. So it's nice. So it will be running out of this downward move, but don't get in through FOMO, because you, as you rightly mentioned, you could be catching a falling knife. And that's what I said earlier in my report, the 3 stocks I mentioned. Just sit back, wait till they find some support and start to move up and get in, and don't penny pinch. And this is where I see a lot of people make mistakes, is they see a stock fall to a level and then they try and jump in at the lowest price and pick that absolutely bottom price, and it could be that if this stock falls down to, you know, whatever the price is there. Let me put my thing on here, my glasses on. It's sitting, had a low of $2.46, and let's say it falls to $2. People will just start jumping in that, hoping that that's the bottom, and trying to eke out those last few cents. But what happens is it's fraught with danger, because sometimes you'll get it wrong and it'll keep going down, and you'll sit on this stock as it's falling away for a period of time, and then it might find some support. I'd always rather leave money on the table, if that makes sense. I'd rather wait for it to move up and tell me it's moving up. And this is what I talk about, is trade on confirmation, not speculation. Don't speculate that it stopped falling. Know that it stopped falling and confirm that it stopped falling, and then jump in at a higher price. And yeah, you are jumping in and you've paid more than you could have paid a week or a month ago. But the point is, you know for certain that it's going up, and you've got a higher probability that it's going up rather than a guess that it's going up. And all too often I say to people, I say, why did you buy that stock? And the answer is, I thought it was cheap. But is it cheap at $2, or is it cheap at $1.50, or is it cheap at $1, or is it cheap at 50 cents? Where is it cheap? And how do you know it's cheap? And how do you confirm that? And that's really what you need to know. But thank you for bringing up that question on Whitehaven Coal, and please just sit back, wait for it to hit the bottom, and then start to look at it as you would the other 2 stocks that I mentioned. Sit back and wait and have a look at those as well. The next question we've got is from Arthur, and he says, hi Dale, I'd like to know your thoughts on Z1P. Is it a good stock to hold for the short term? I'm very excited to hear your thoughts. Best regards, Arthur. The quick answer to that question is absolutely not. It's not a short-term play, this stock, but let's go and have a look at the chart. I'll bring that up right now. A lot of people are trying to catch a falling knife on this stock, and they really are. And I've seen a lot of people, because of obviously Afterpay and this whole buy now, pay later space, but there's a lot more competition in this space at this point in time, and I think that's going to continue. And yes, the shops are opening up, and people should be using, you know, Z1P or ZipPay a lot more, as well as Afterpay. But you can see here, you know, in the last month, it closed there in October at $6.50, and you could have bought it back there at $6.50 in June 2020, well over 12 months ago. It's fallen quite heavily since this all-time high through here. Let me put my lock on so I lock it onto the price. You see, oh, that's the wrong tool I've just used. You can see there it's down, where is it? It doesn't say. 55% in price. Let me just delete that and I'll use the right tool. Yeah, there it is. So we can see at one stage it was down 58% in price. I'll just do that for you. So you can 58%, and currently it's down about 55%. So really this is a real solid area. If we start seeing a downward move in this next week or 2, and it'll blow through that, and then it'll blow through that sort of level there, and it'll keep going down lower. At this point in time, this is not a stock that I want to have my money in at this point in time. You did see it's finding a lot of support around that sort of area there. If I use my crosshair, you'll see it. There's a lot of support. If it breaks that support, then this thing will go probably all the way down to this sort of level around $4.40. But I'm not saying it's definitely going to do that. I'm saying the probability right now is that you could be catching a falling knife. I'd need to see a lot more before I get excited about this stock, about whether it's going to rise and move into a new uptrend. But given all the competition and everything else at the moment, I think you might be pushing it uphill to be able to think that this stock is a short-term trade or even a medium-term trade at the moment. But just sit out while it's falling away, stay away from it, and if it starts going up, then start to look at whether it's confirmed it. But thank you for asking the question, Arthur. The next one we have is from Brat's Babe, who's a regular contributor to our show, asking questions, and they say, hello Dale, can you please look at Cooper Energy? Would you say it has stopped its downtrend and is now consolidating, and what resistance should it overcome before it becomes a buy? Thanks to your opinion, and thanks for another great show. Thank you very much, Brat's Babe. Let's go and have a look at Cooper. I'll put my glasses on again. A nice energy stock. Now, energy hasn't performed anywhere near as well as what I'd hoped over the last year. We thought it would produce a lot better results, but obviously COVID stuffed it up. And again, this is more of a trading stock. As you can see, you could have bought Cooper Energy way back in 2005 and all the way through here. So it does move nicely in a trend. We've had, if we look at the monthly chart, you can see it's now breaking above sort of roughly, if I put my pointer on there, rough sort of downtrend line. It's starting to break through that at this point. It's looking good. I do like it. Has it stopped falling yet? We'll have a look at the weekly chart, but it looks like it may have stopped falling at this point. The only thing that bothers me is it came right back off that high. You can see here it closed at 29 cents and a high of 31 cents. But let's go and have a look at the weekly chart to see what we can see here on the weekly chart. And again, it's not a highly liquid stock, as you can see by the bars. It's not a big stock in my mind. 32 million shares at 27 cents. It's not a huge amounts of money, but it's not too bad. I like it. I do like it. I think, if it really does break through this sort of 30 odd cents, I think it will take off up to 40 cents and maybe even up to 50 cents, but I do like it. But it is a more lower liquid stock, and so you just need to be careful with that and how you manage it. But again, you can see there's not a lot of, to me, the volume is not, whilst there's a lot of shares traded in it, I don't think there's a lot of liquidity in it. Now, I know a lot of people think volume of shares is liquidity. No, it's not. It's only one metric in liquidity. You need to know the other metrics as well to make sure that you do understand what is a liquid stock for you. But I think this is one worth looking at. But just be careful. If you're not used to trading stocks, be very, very careful, and make sure you have a solid exit strategy on it. Making sure you've got a nice stop loss on it, because it can move quite fast. But thank you very much for asking the question, Brat's Babe. Now, if you have a question that you'd like me to answer, the first thing you need to do is publicly subscribe to our channel so you ensure your question is answered. And then all you need to do is just type your question in the comments section below. Now, remember that here on this channel, we do these Monday market reports each and every week. We also do our live stream on Tuesday nights, and that's 7 to 8 p.m. So I look forward to seeing you there. Hit the subscribe button now, click the bell on the right of it so you know when we upload our videos and go live. Also, give us a big thumbs up if you like the video and you like the channel. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.